Rob McEwen, always a pleasure catching up with you in your backyard, really, in Beaver Creek. Absolutely gorgeous. And what a setting to talk about the gold price. I can't wait to get your thoughts on where you were this summer when you got the news and saw that gold was exploding.
It was expected.
You were waiting for it.
Yeah, but I mean, here at Beaver Creek, we come from Toronto. It was 600 feet above sea level. Now we're at 8,000 feet here. That's like the gold price. It's moving higher. You
have always been such a cheerleader and active promoter of the gold price. You've never wavered from your love for gold. So what do you feel were really the factors driving? I mean, there's so many things happening in the world, obviously, interest rates, the trade war. You know, was there one thing that was really the catalyst for you?
I'd say interest rates have been a big factor in it. I mean, there's so much debt that's now carrying a negative coupon. Gold now looks like a place you can put money and make money. I mean, the idea of buying a bond and getting less money back than you put in is just so alien to most people. And it seems that the world is starting to slow down, and the governments around the world feel they have to lower interest rates to spur consumption.
Well, we saw that with the ECB today.
Yes.
Do you feel that the U.S. is going to continue to follow suit and keep lowering rates to negative, perhaps?
Well, the speculation is that we're in the middle of a currency war, and everybody's trying to lower their currency to keep their export markets open, to devalue their currencies. And President Trump wants to have more exports, and you're probably going to see a lot more pressure on the Federal Reserve to bring rates down lower. And so you have a positive return then on gold because it's not negative.
How ugly does this play out?
I'm not sure how ugly. I'll put it in a gold reference.
Right.
Gold from 70 to 80, 71 to 80 went from $40 to $800. So a 20x move. And then it dropped down to $250 in 99 and 2001 and ran to 1900. That was a 7x move. So if you applied any one of those multiples to the low we had recently in 15 of 1,050, you could see, I always thought 5,000 was in range, but you could see an $8,000 to $21,000 price on gold. Now, what does that mean to everything else?
Right.
It means that the dollars we keep in our wallet aren't going to buy as much. And everything starts slowing down. I think some of the big concerns around pension plans, life insurance companies, they're all predicated on actuarial tables that are assuming 5-6% rates of return, and they can't get that now.
Do you think the U.S. enters a recession in 2020?
The stock market's had a very strong run, and last year the IPOs, more than 80% of the IPOs were for companies that weren't making any money.
Right.
The last time it was at that height was the dot-com bubble in 1999. If you look at the Russell 1000 growth as opposed to value, it's at the levels that we hadn't seen since 1999. Some people, I don't know who coined the phrase, but I thought it was very good. There's a bubble of everything right now. And it's just, we've had a long run, and you're saying, could the Dow double from here? Right. I think it's hard to see that.
Would you be in equities, U.S. equities right now? Do you have exposure to the big names, or
I'm in the crazy phase. I have lots of exposure to gold bullion and gold stocks.
That's it.
Pretty much. There's some real estate, but no.
You know what's interesting, Rob, is that you've spoken about $5,000 gold, but it doesn't sound so crazy anymore because people have now upped it and are talking $10,000 gold.
Well, I saw Citibank just came out with a $2,000 number for gold in the next year or two. And that's extraordinary that an organization of that size is making that statement today.
A lot of people obviously very happy with the gold price, but want to see the enthusiasm come back into the mining stocks. Speaking specifically more for the juniors here right now. What do you think it's going to take? Is it just a matter of time, or do we need to get back to the original highs of 1900?
No, we need a lot more circulation of what's been happening in the market. If you look at from the beginning of 2016 till now, the Dow's up about 53%, the S&P's up about 44%, gold's only up around 43%, but the GDX and the GDXJ, the ETFs for the seniors and the intermediates, are up over 100%. They're up more than 100% above the Dow. I mean, and that is lost on most investors. They're saying gold's lost.
You've been critical of the mining industry in the past. When things weren't good, you were saying, things need to be fixed. Do you feel that they've ironed out their issues? Is it in a healthy space right now, or is there still a lot of room for improvement?
There's been a lot of improvement, and it is getting healthier, and you're seeing margins return with gold at $1,500, and the average all-in price is around $1,000. There's a good margin in there, and you're going to start seeing numbers that the market's going to be surprised by. So it's both going to be the juniors. There's been some incredible stories. I mean, we bought into a company, Great Bear, last summer at $1.45. It's at $8 today.
I know a lot of people kicking themselves for not getting in on that one.
And there's a fellow wandering around here that I met in Vancouver a couple of weeks ago. His cost on Great Bear was 15 cents. And I think if the broad public suddenly starts hearing these stories of, I can point to 10 companies, juniors, that are up 2 to 4x in the last year.
But that's a really good point, is that the public doesn't know about it. I mean, Canada's a bit of an anomaly where people have more of that knowledge in mining stocks, obviously, since that's our industry. But what do you think it's going to take to educate the public? Is the mainstream media to blame because they just don't care about mining stocks?
It has to get into the media. Like when you looked at the tech space, when it first started going, you heard these stories of fabulous gains, and the media picked up on that and started telling more stories. More editorials came out. And if that starts moving into the broad market, then people will say, well, maybe I should have some exposure to gold. And then you look at Ray Dalio, who's an incredible investor, and he's saying, put 5-10% of your money in here. And that chorus is going to get larger.
That could change if you have more of the Ray Dalio speaking out.
Yes.
Let's talk about McEwen Mining now.
Okay.
Give us an update here. What's the goal plan for the rest of the year here?
We've got lots of exploration. We've been hitting exploration hard for the last 2 years at our Black Fox property in Timmins, Canada, and also in Nevada at our Gold Bar property.
You recently lowered guidance, which was something that was applauded by many. It's not something that a lot of CEOs would do. Tell us about why you felt it was necessary.
We've had some difficulty at our Black Fox operation, and at Gold Bar we had some delays. And I just felt we need to be fully transparent with our shareholders and try to eliminate any surprises. And you look at it and say, well, this is painful, we've got good news and bad news, but why don't we just talk about the good news? And I said, no, you got to talk about both sides of the story. And then say, well, we've had this, but we've addressed those issues now, and we're pulling ourselves out of the hole that we fell into at the beginning of the year.
Rob, do you feel this is something that not enough CEOs do?
I didn't really think about other CEOs, I just thought about our shareholders.
Well, there's a reason you keep winning the Mining CEO of the Year award, so you're doing something right. Rob McEwen, thank you so much for speaking with us.
It's my pleasure, Daniela.
Back to the
thank
conference.
you.
And thank you for watching. We will have much more for you on Kitco.com.